Good evening, traders around the world. Welcome at this evening time, nighttime daily review. This is the algorithm I'm programming, and I am doing it with backtesting, journaling, tape reading experiences, and yes, we'll go straight to the chart. We want to review the day. Today I'm greeting you from Suriname. We want to review the day and set out what we will be doing for tomorrow. Please be aware that trading does involve risk and know how to manage your risk. Number one is preservation of capital. Thing of a number one thing if business doing is to keep your money. Yes, while we are here to make money, we are here to learn also how to keep our money. So I will go straight to the chart. Maybe I can do this first. We had this morning AM session. We had CPI number came in. We did. I have just upload a video on the execution after CPI number. So CPI number came in. I did some tape reading, and while tape reading, I'm doing screenshot and filled in my book 7, with the information and the experience that I'm recording. I was looking at a market maker sell model from the 15-minute chart. I saw this return to base, this 1 2, this distortion. I was looking for the market to give me the sell side delivery, and we will see on the chart what it all did. These are the things that I was writing as I was tape reading the event, and after the event, tape reading the CPI event, studying order flow and liquidity run. And those are the objectives, the things that I have been looking at. How the market first run for stop, is it manually or is it by algorithm? What are the PDRA that are in play? What have they left? Which macro they have used, and for what purposes have they used it? I was just studying and reading the tape this morning. I had purpose to enter after 10:30, after 10. I did enter, and the result was negative, meaning that I took a loss. I closed the chart, and because of the stop loss, the what I'm allowed to lose before I in my money management program, what I allow. Today I will be doing the analysis from the micro contract of both the ES and the SM Nasdaq. So this was the ball game. We defined the opening range gap on Nasdaq. We saw the gap was huge, and normally when the gap is that huge, what we are doing, we expect price to drop and to the last session high, or at least to the middle of this opening gap range, and then go further if it will rally. If it leaves the lower quarter open, it is a premium gap open. We are looking for it to rally strongly toward the buy side. I was expecting it to close, however, focusing on the hunt of the market maker sell model delivery. I will check later, maybe later in the afternoon, my personal study, and check what happened, what I did not see as correct for the loss. However, whenever we are not afraid to take losses, neither to leave as we hunt our setup parameter criteria, we are not afraid um, to leave money at the table, because our model have not set parameter have not come in play yet. As you hunt, be not afraid to leave that money and wait until your model came in play and trade and enjoy your model delivery. I take always full responsibility for any trade. If it is a win, I am the one that have operate based on the analysis. If I lose, I am also the one that have operate and based on the analysis. And the result is that I most of the time when I take a loss, I check with my money management if I should go to the micro plan to correct the drawdown very slow, or stay at the mini. In this, I have already decided to go to the micro plan and correct very slow the drawdown until I again reach the equity balance, my equity balance that I lose this day. Then I will consider either to continue with a micro plan or with a mini plan. I saw this familiar pattern I use, but I am not at ease using it in the opposite direction of my analysis. So you could see that I was really holding on, filtering out longs, and holding on to what the idea was that I was looking at, and also where I saw liquidity after the CPI number trade came into play. It was a great reading. It is on the channel to see. The reading is okay. The idea is okay. The algorithmic language has been explained, I think, has been seen as we were watching the tape reading, watching live price action. We have learned a lot. If you sit down with the audio, I have learned a lot. I will be taking the trade on the 1 minute for low risk. For now, I'm just waiting for mine. I have filtered all other noise and so on and so on. I think yes, this when I saw this, I knew this familiar pattern. This pattern, the up close, down close, close below, is always a familiar pattern. What happened? I checked with the other sister. I saw the ES was also rallying, but we had the there was cracking correlation with the DAW, and there was sign in the dollar index that we could have gone, that we could trade to the downside. I wrote ESM going up, the DAW collapsing, dollar index rallying. We must have patience to see if the sisters will give way and turn following the market. Relative strength, I think I have conducted relative strength uh, test live, actually not live, on tape recorded, and we finally took a loss. We finally took a trade. I took that trade on this candle when we were going up. I took this trade based on the fact that we trade and left this, how you call it, this SEBI. Initially I thought it would be a breakaway gap when I saw a price left this SEBI trade with this candle to the consequential encouragement, drop and close below this close below this fair value gap, I took the trade, selling when we were rallying, and I had expect price to go to the sell side. Later, I checked with the main threshold of this order block, and I think it is where I missed the reading, or I could have waited to see a strong displacement that would pass this swing low, or this busy and silver. Initially, if you check with the video that I'm uploading, I think I am busy loading it up. Yes, it is complete. Can close it. It is this video. If you see what I have been doing around this SEBI, I was reasoning that I will only engage the market if we trade past the SEBI and use it as inversion value gap being silver bullet. If I had hold that initially idea and thought, I would not have take this loss, and I would have stayed clear. But we took a loss, but the idea is still in play. At the time, I thought the idea was still in play. One loss per day, close the chart, take the responsibility of it, regroup, and then come tomorrow back. It is the life of a trader. We are not afraid to take a loss. A loss day does not mean we can trade. A loss day doesn't mean our model is not good. A loss day is simple. A red day, a simple day. That is how I think I framed this, when I take a loss. Where is this video? Yes, the latest is when I take a loss. Just upload it. Video. Yes, if I take a loss, I take full responsibility, close the chart, and regroup to be back at it next. That is how I call it, and it is really how the mindset is. It is just assurance. And what I have done, I regroup, went and take some. I didn't do exercise. I relaxed, closed the charts, left until late this afternoon, actually. Late afternoon, evening. Then I come making the decision that I will trade, and I will go to my micro plan to correct the drawdown first, and then come to the and then again make decision to go to a mini plan. What I'm looking at, we are making higher high. This is a weekly chart. I want to see the daily chart from the weekly chart. We are making higher high. We again has gapped up and opened there. We see that there is a wick, not a long wick, but it is good to consider the consequential encouragement of that gap, how this price action will close there. I think we trade bullish this week, and I thought with the news, the CPI number, I thought with CPI and maybe later FOMC event, we would have be able to drop lower to the sell side, especially I think the Nasdaq. Yes. May drop to the sell side. That was and that has been my analysis. That is what I hold. We see with the Nasdaq, we see a stronger, a bigger jump to open right here. Price is going to draw to make efficient this gap, and then drop further. How much further we don't know. We also are not in the business trying to pick top and bottom, so we will be going either sit at the side or going and follow the market maker steps. If they are going biasly, if they are trading bullishly, don't try to trade against them. You do that only when you see on the 4H or the daily chart a definite market structure shift lower, then you can do that. But for now, consider the trade to be taken, consider it to be engineered liquidity on the buy side, drop, and then go to take the engineered liquidity. This is actually not normal. It is the kind of market that we have during election years, the kind of market that is being pushed by the market maker. The Fed is playing with the market. By the time by this time, if I think on seasonal tendency, price must have been is expected to be either from the spring high to some low, to then go to the fall low, to rise to the how you call it, the December fall low to December period. But it is not what we are seeing. We are seeing instead that the market is rallying, creating higher high, and this is really something that a mentor, I think he commented on it when we were seeing the same thing on from January till March. We were looking at the market and we were seeing the same rallying, creating higher high. He commented that his concept is not he is just looking at the chart just as we are looking at it. He doesn't have anything in his repertoire that can predict for. There is no terminus, nothing that can. When we were here, I mentioned May, April, when we were creating higher high. Here is where he made the same remark and comment. This is the familiar pattern. This is it again. It is a great and wonderful pattern to trade on. Anytime you see this, you may be buying this open. It will drop your stop loss below this, and then enjoy to the next draw off on liquidity. We don't have any terminus on the buy side, so we just have to be careful trading nimble. As reason why I decide to use my micro plan, and that's why I will be going to the micro contract, where one handle or 1 point is $2 in $5 for S&P instead of 50, and where with the micro Nasdaq June contract, where for the Nasdaq, where one handle, one point or one handle is 2 US dollar instead of 20 US dollar. The reason is that for now, the trade that I want to take, I want to be nimble. I want to engage, stay in the market, reading and trading, but I want to be nimble, exposing my capital. Don't expose my capital to greater or large risk, and the risk on micro contracts are less than those on mini contract. So when I correct the drawdown that I have taken this day, I will then consider if I will go back to the mini, or will stay trading in the micro for the scanner's sake, and for what I'm sharing via this channel. So for me, the decision is sound. I need to correct a drawdown now, which is a normal given effect that every trader, we must respect loss. We must know that this market can give us loss. We can have 100% winning days. We must respect loss, but when we do that, it is time to revisit your money management plan, balance yourself, have your head in place, and then make trading decision. In this case, I make decision to use the micro plan. And that is why I've cleared all the annotations on this chart. For after this recording, I will just go and put annotation on it, like high time frame till 15 minutes and then till 1 minute. For with this micro contract, I can trade. I have larger stop loss, and still it won't be that damaging if I take a loss from the micro contract. I will be trading on the micro from now until I correct the drawdown. The reason why I don't show the drawdown is about 600 US dollar, and the reason why I don't show it is on my private account, and we don't want to show our real account. Whenever I trade live in front of you, I use the how you call it, the demo and the paper trading. So until I correct this drawdown, that I am now the minus 600, I will be trading the micro contract, both the ES and the ES and the, how you call it, I will trade the ES and the S&P, the Nasdaq and the S&P, the SPOOS and the Nasdaq. I think that is what we will be doing. So I won't annotate this chart right now. I want to keep the audio review very short today. I've reason why I'll go to the micro contract. We had calendar review tomorrow. It is also the PPI number, core PPI number, is also a high volatile news event. So please don't trade ahead of it. Wait, and after 10 o'clock, 10:30, then for the rest of this week till Friday, we can go and trade freely the session, the kill zone, using your model to deliver for you. So yesterday I told you, new and less experienced trader, to not engage this whole day. So those that have listened to that advice, have not that recommendation, have saved themselves some drawdown. In this case, I can trade, and I had purpose to trade, and I had to trade this after the CPI number, before the FOMC, but the market did not speak to me as clearly, or I have not seen as clearly as I wanted to see the market run. And this is what we had, a really not so strong delivery, especially after EM, after the CPI number. This was a little bit choppy, and there was a final hour after the morning PM session, see a drop, and gauge the consequential encouragement of this, and then start running to the buy side. For me, I was already out of the market when I took that loss. For me, was close the chart and go and do something else. What I will do for now is that I will not annotate this chart. I'll just go to the micro contract. For now, I will be deploying my micro plan, which is a beautiful plan also. It is for those that are learning, for those that are new to trading. It is recommended to use micro contract, and then you can you are allowed to have a larger stop loss. You are glowing slow. It is the go slow contract. You just go slow. You can take 1, 2, 3, even to 5 losses. For if you take a loss of 10 multiplied by 2, 10 handle loss, even 20 handle loss is a $40 loss. For one handle is $2. The only thing, the profit is not that large. And actually, as a new beginning, you are not looking, new beginner, you are not looking for big profit. You are looking to master your market, to market your model, to apply logic, to learn best how to navigate the market. So trading on a micro is best, and that is why I made a trading decision that from today I will be focusing on the micro contract to correct the drawdown for my personal account, but also to set a example that for the micro you can also trade and make money from the micro. I will do later some annotation. For now, I'm looking at this, what a PPI number will do to this relative equal high. We have just have an engagement. The price wick past these two highs, relative equal high, but now it have created say a shallow run. We will look what price will do to it. We can go and annotate also this one, and we want to see what price. Actually, we have a new dealing range from the 50-minute. This is a swing high that has been taken, and then a swing low. Even this one or this one has been taken too. So this is a new dealing range. How is it useful? How is it useful? Prior to this dealing range, what has price been doing? Price was going up, so it dropped to create a low, and then first the sell side has been taken, then the buy side, then the buy side has been first taken, and then the sell side. So we are in a new dealing range, and if you follow what the educator ICT is teaching us, the market will deal in this range. Now it is in premium of this range. How it will trade in this range will be very nice to see. as we go and trade with the micro plan. The micro can do the job. I'm definitely sure that the micro can do the job to correct the drawdown, and even I can trade the micro my whole life. There is some volatility characteristics between the mini and the micro. That is why the stop loss can be much larger with this micro. It has to do with the volatility. A lot of people are trading the micro, and your stop loss must not be too tight. So I hope this has given reason to the traders to be. I will be going later when I close this record. I will be going to do some annotation from higher time frame analysis from the mini, backtesting and journaling, looking at familiar signature that I trust in the market in price delivery, and trading the micro, and hope that with this with the analysis that I have, I will approach the market not before go to the calendar, not before 9:30. I will just wait until after 10:30, after 10:30, 30 minutes after 9:30. Then the dust has settled for these news driver, and it will be very nice to trade after 10 and trade this liquidity. I will be recording, I will be trading this recording, and make sure I have them in example for those that are subscribers to this channel. Yes, I think I can close for now. I will do some annotation, but not only annotation. I want to study thoroughly this ESM. I want to study thoroughly this run, so I will do back testing. I will do journaling, writing that I'm pleased that after SOMC I rest. I allow the market to trade, and after the market trade I saw first this run to engage this liquidity. I trusted that this was a run to below this on 5 minutes is better to see. Then I will be writing, making annotation. When I saw this bullish displacement that take this, I knew we were in to go in to trade higher. So I engage on lower time frame, priming my mind, setting myself up, gaining and gleaning, experiencing with best backtesting and journaling. So I want to say once more goodbye for tonight. I think the mentor spoke about it, and this is what he himself said during the course, during the respect risk. Everybody that trade will incur loss, except that how I handle myself is crucial to my profitability. How will you handle yourself after you take a loss, or after you have a loss day? How you will do that is crucial to profitability. 100% strike rate is not realistic, and it is also not needed for profitability. So as a consistent, independent, profitable, independent, informed thinking trader, we are in this to make money, to be fruitful, making sure I do not lose money. Preservation of capital is our number one goal, and working toward consistently profitability is our secondary goal. And for to protect, to guard those two goals, I have both a mini plan and a micro plan, and I make trading decisions. So that is what I wanted to share on this review today. Good day, good night, and I am saying great trading day tomorrow.